Friday, June 25th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how inflation has been permanent in Britain for the last 100 years. Yesterday, the governor of the Bank of England, or the MPC, said that inflation might go above 3%, but that it will be transitory or not permanent. Before I look into that, though, I like to talk a little bit about what's going on in the real world, so to speak, not only with me, but with some government ministers here in the UK. Well, with me yesterday, I decided I needed to buy a new laptop. I've had problems with the desktop PC that I had. It is an Apple, and I decided to get another get a laptop instead of a desktop. A laptop is more practical, and I was gonna buy it online, but I decided to go to the Apple store in a big shopping center relatively close to where I live. And I have to say, the experience is depressing, watching everyone wearing you know what, young people really following these rules. And I recently was advised by one of the viewers of the channel that you could get one of these that exempts you from wearing you know what. I don't want to mention these things, and so I didn't wear it. I was walked into the big shopping center, or mall as you call it in the US, and I didn't wear that thing on my face. But once I got to the Apple store, there was a very big security guy. You have to tell him what you want to do in the store. You can't even walk in the store anymore and talk to someone and say, oh, I want to buy one of your laptops. I have to go through an interrogation. And he said, oh, you have to put that on. And I showed him that, and he said, oh, it doesn't matter. So it wasn't really nice. A very depressing world I think we live in, unfortunately. Here in the UK, they're pressing people. It's almost like a blackmail. If you don't get the double, you won't be able to do anything. They're really pushing it. And now we get big news, in my opinion, overnight. About Matt Hancock, who is the health secretary. He's the guy who's been pushing the fear for these last 15 or 16 months about this disease, right? They've been pushing propaganda about social distancing, isolating, not mixing households. So now it comes out that he's had an affair with an aide that he hired. And there's really damning footage of him in his office embracing this woman. So here it goes. Matt Hancock refuses to comment on pictures appearing to show affair with an aide in Department of Health. So the worst thing is that he hired this person and is using our taxpayers' money to pay this person. It says Matt Hancock has declined to comment on reports he's having an affair with his aide, Gina Colodangelo, in the Department of Health. The Sun revealed pictures of the health secretary appearing to embrace. Well, I saw the pictures, not appearing, he's doing it. His aide, who he hired last year with taxpayers' money in what the newspapers called a steamy clinch. So there you go. It's such a horrible disease that you go around having affairs, a married man, with other women, with women that you work with, and that you hired during the pandemic. Well, there's another guy, of course, Mr. Doom, of course. He predicted hundreds of thousands of deaths here in the UK and millions in the US. It's Ferguson. the guy who works for Imperial College. He was caught last year as well, having an affair during the pandemic. So some of you might remember, here's the story. Government scientist Neil Ferguson resigns after breaking lockdown rules to meet his married lovers. Anyway, just wanted to put that out there. I don't want to get too much into this or I will be deleted from YouTube. So back to good old inflation. So yesterday was the MPC meeting. It's like the equivalent of the FOMC. We had statements from the Bank of England, of course. They're going to continue to do their QE. I think since last year, they're going to add 500 billion pounds to their balance sheet. It might not sound a lot. It's about $750 billion, but the UK economy is only about 2 trillion pounds. So that's like 25% they're printing out of thin air. It's crazy. So let's go through what the Bank of England said yesterday. Bank of England says inflation likely to exceed 3% in coming months. So we'll go through that article briefly, and then I'll show you why inflation has actually been permanent for the last 100 years in this country, in Britain. It used to be Great Britain, this country. But unfortunately, the inflation that has taken place is really taking the great out of Great Britain, in my opinion, because inflation, of course, is the extraction of wealth unknowingly. It's basically theft. There's very few who benefit from it, of course. The very wealthy that own most of the land in this country, most of the property, the people who can protect their wealth, but not the average person who has to pay inheritance tax when their loved ones die. Of course, the people at the top, they have everything set up in trusts, and they have very good lawyers that and accountants that make sure that they remain wealthy, while the general public not only is taxed through inflation, but a lot of people are taxed after they die. Their families are, for that matter. So let's go quickly through this, see what the Bank of England is saying. Bank of England has sought to calm fears about inflation, which is expected to exceed 3% in coming months. Before I go further, I'd say a few years ago, CPI got over 4 or even 5%, and the Bank of England didn't even hike rates. So I'm not too sure why they're talking about this, really. I think they'll let inflation or CPI run quite a lot. Saying the surge in prices was transitory. There's that old word again. It's like the green shoots we had a few years ago, and should not affect monetary policy. Well, what does that mean, not affect monetary policy? Well, it means that they're going to keep inflating. They're going to keep accommodative. They're going to keep printing money. They're going to keep rates at zero. And that's only going to make inflation worse, because they're the ones who create inflation. Because the CPI, yes, it's used to measure what they call inflation, but CPI is just the consequence of inflation. Unfortunately, many people have been brainwashed into thinking that the doctored CPI is inflation. The central bank's message came after data last week showed inflation, or CPI, rising much faster than it had previously forecast, as the economy rebounded more strongly than expected. The BOE's Monetary Policy Committee signaled that it would wait for inflation to subside rather than take action, as it stuck with its exceptionally loose approach, which is inflation. You see, they've got everyone very confused, but I'm going to show you that there is no confusion, and I'm going to use actually Bank of England data for that. But let's just go through this a little longer here through this article. The committee's central expectation is that the economy will experience a temporary period of strong GDP growth and above target CPI inflation, after which growth and inflation will fall back, the MPC said in its summary of its latest meeting. It said that inflation would rise further from the 2.1% recorded in May and was likely to exceed 3% for a temporary period. So I'm going to stop right here, and I'm going to show you the Bank of England inflation calculator, and just to show you how inflation has been permanent since the end of World War I or since World War I. First of all, I'm going to take you back over 200 years to the Bank Restriction Act of 1797. Well, that act basically took Britain off the gold standard for the Napoleonic Wars, during the Napoleonic Wars, and it was rescinded in 1821. So in 1821, Britain went back on the gold standard. It meant that banks had to redeem every pound note for a gold sovereign. That was a pound, and it is still a pound today, a gold sovereign. Legally, it is a pound. Of course, it's worth much more in Bank of England notes, over 300 pounds, right? So I've looked at the Bank of England calculator, inflation calculator, and I've done this many times in the past in my videos. Some of you are probably familiar with it, and some of you probably aren't. This inflation calculator, it says here, our inflation calculator to check how prices in the UK have changed over time from 1209 to 2020. And I agree that we have to take these numbers with a pinch of salt. It is coming from the Bank of England, but still, this will show you how things have changed. So here we go. We take a pound in 1821 and we see what that pound costs in 1914. What would goods and services costing a pound in 1821 cost in 1914? So yes, 95 pence. That doesn't mean that the pound has gone down to 95 pence. That means that you need 95 pence to purchase the same goods, basic goods that you did in 1821. So actually, according to the Bank of England, in those almost 100 years, inflation average minus 0.1% per annum. So we actually had slight deflation as per their definition, of course. I think as well the national debt did drop from about 800 million to around 650 million during that period. So it is normal that you had stable prices. You had a gold standard as well. The pound was a fixed weight of gold, and you could convert your notes at a moment's notice. You could go to any bank and they would redeem that note for a fixed weight of gold or a sovereign. Or you could take a £5 note and get 5 sovereigns. That was the case from 1821 to 1914. So you had actually deflation. And this country, of course, was the biggest economic power during that period. It had the reserve currency of the world as well. So I'm not going to go straight to 2020 now from 1914. I'm going to go here from 1821 to 1921. So you can see how World War I affected this inflation average from 1821. Of course, World War I took place in 1914 to 1918. They suspended the gold standard. World War I, they had an excuse of a big crisis as usual, right? And yeah, we've never gone back to a gold standard. There was a gold exchange system that was brought back by Churchill, but that was different than a gold standard that you had in the Victorian times, because you couldn't really take a banknote anymore and have redemption in gold. Gold didn't circulate anymore. But anyway, from 1821 to 1921, look at the difference. Now you needed 2.24 to get the same goods, basic goods and services that you could in 1821. And that was just adding 7 years to that almost 100-year period. So it just goes to show how the war really put this country on an inflation nightmare, I would say. So now the other important data that we have to look at, or period of time, is from 1914 till now. So what would goods and services costing a pound in 1914 cost in 2020? Well, 118 pounds. So inflation, or CPI, has averaged 4.6% per annum. So you can clearly see the difference that we've had rampant inflation for the last 100 years or more. During the gold standard, there was slight deflation. And some of you might say, well, since the Bank of England became independent in 1997, inflation has gone down. Well, it hasn't. And I would say the inflation that they use here is the CPI, which has been heavily doctored for the last 25, 30 years. So I've looked at the pound in 1997 and the pound today. So again, the same exercise. What would goods and services costing a pound in 1997 cost in 2020? So a pound 86, 2.7% inflation per annum. And they're supposed to have a target or goal of 2%. So yeah, don't be fooled by the Bank of England. The inflation is going to continue. The pound in your pocket is going to be the same, so to speak. It will still be a pound, but it's going to buy less and less and less for years and decades to come. And I'll say it again, gold and silver are the best protection, a monetary protection, because they're money against inflation. Just look at this chart of the price of gold in pounds going back to 1968. It used to be less than 20 pounds. I think it was around 14 or 17 pounds per ounce. And look at where we're now. The hidden tax, the wealth confiscation, is going to continue. So what's the best way to avoid it, apart from having precious metals? Well, it's not saving in this currency that is being inflated out of thin air. It's having tangible assets like bricks and mortars. And I don't mean buying loads of properties and leveraging to make a buck or to try to flip it. I mean having long-term assets like that. Maybe some land as well. I think people should try to avoid the currency that's been inflated. That is losing all this purchasing power. And by that I mean keeping too much fiat currency in the bank, or investing in gilts, which are government bonds, which the 10-year gilt right now is yielding less than 1%. I mean, buying those long-term gilts, even the shorter-term gilts, is a recipe for a disaster. It will not help keep your purchasing power. And why do fund managers keep buying this rubbish? Well, because the regulations say that they have to buy 60% stocks, 40% bonds. The regulation, of course, doesn't say they have to buy sovereigns, which are legal tender and real money, because gold and silver, actually physical gold and silver, are not considered financial assets. They're not even regulated by the FCA, while the ETFs are, but we know that the ETFs are questionable in terms of whether they really hold any gold or silver. So with that, let's quickly look at where the markets are this morning. It's 8:22 a.m. London time. So we've got spot gold at $17.81, up $6. Range has been $17.73 to $17.82. It's almost like Groundhog Day at the moment for precious metals. Very tight range. Spot silver is up 21 cents, just under 1% at 26.13. High's been 26.22, low 25.89. The Dow futures up 53 points. Nasdaq futures down 4. S&P is down a point. The FTSE 100 index is at 71.16, unchanged. One thing I would say about the FTSE, I remember it being around 7,000 back in 1999, 2000. So hasn't really been a very good store of value over the last 21 years. Sterling is down 0.15% at 139.03. The euro is unchanged at 119.37. The dollar is down slightly versus the yen at 110.77. Dollar's down 0.2% versus the yuan at 645.70. The Aussie dollar is at 75.90, up 0.1%. So yeah, Aussie dollar continued to creep back up. WTI crude is unchanged, 73.21. High grade copper down slightly at 4.30. The 10-year yield is unchanged at 1.49. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.